I hope everyone is having a fantastic weekend. Today, guys, we're going to be jumping back down into the world of BTC, taking a look at what's been going on most recently, what we think is likely to happen next, and all that great stuff. We'll be jumping into the on-chain metrics. We'll be taking a lot of, a bit of a deeper dive and a look as to what has been going on. There's some interesting developments in terms of the on-chain data that I do think it's really important that we all pay attention to. But, you know, this is my opinion, my thoughts on it. I'll leave it up to you guys as to whether or not you think these metrics are worth watching, or whether you think a trend line on a chart, for example, is better to kind of just focus on that. Now, there's a lot of smaller time frame stuff that I'm going to go through, some medium time frame stuff, and some longer time frame stuff as well as the on-chain data. So do stick around for the entire video. Don't miss a part. Don't skip ahead or any of that kind of stuff, because you may miss something quite important. As I get into it, smash that like button. Let's see if we can get this video to 2,000 likes. That's going to be a major challenge for the community. Let's see if we can get there. I think that would be absolutely fantastic to see the appreciation. I'm getting a lot of hatred for kind of speaking my thoughts and opinions on what is going on right now. And I don't want to kind of rant about it. Just, it's one of those things. It's not going to change my direction. People kind of, being outspoken in a negative way. Like, this is what I see inside the data, and you can take it or leave it. It's entirely up to you guys. I'm not going to change my thoughts and opinions just because there's a vocal minority. Okay, so let's go ahead and get into the smaller time frame stuff, the medium time frame stuff, then jump over into the on-chain data, then take a look at the longer term view on the chart. So let's kick things off with our small time then. This is the hourly chart. And I think we're in the progression of an Elliott wave triangle. Elliott wave triangles are made up of 5 overlapping structural waves. These are made up of 3 waves internally. So A wave is 3 waves, the B wave is 3 waves, the C wave is 3 waves. The D wave would be 3 waves, and the E wave can be pretty much anything, but you would expect it to be 3 waves regardless, but it can explode even potentially down lower than my invalidation line that I have marked up here. Okay, so you can see that we're moving up. This is the D wave. The D wave, of course, this area is, of course, going to be the confirmation of the triangle. Okay, so if we get rejected here, we've already got 2 touch points on here. We only need 2 touch points at the top, 2 touch points at the bottom. It doesn't matter if we overextend, but we cannot really peak above this area on the D wave. So we have kind of boundaries here that we're kind of looking at. I'm not expecting us to kind of push up into new local highs. If we do, then it's not a triangle. Okay, so that, or I've really messed up my calculations on this, and this here is an E wave, but I don't think that's the case. It would be a simple corrective structure if that is the way to go. Now, Elliott wave triangles can only appear in 2 places on a chart. They can only appear in a 4th wave movement or in a B wave movement. I think this is a 4th wave movement, meaning that we have our target up here at $21,509.37 based on the existing low down at this bottom corner here. Okay, so short term, I'm thinking up, but we're expecting some volatility probably with that E wave before we actually get that kind of bigger move upwards. Okay, so do expect this to kind of be a bit bouncy over the weekend as we kind of finish off the Sunday and maybe come up here before we're actually pulling back down. Now, if I throw the liquidity in here, you can see, look at that. This is target range, right? We can kind of see that the liquidity is stacked right on top of that target range. Up there, then you're talking about bordering the 23K when we go up higher. So yeah, just kind of keep that in mind, guys. You can see the liquidity is also right back, slap bang on the 1.236. We can throw it right there. You can see the 1.236, which is my target zone. Throw the HTF liquidity, and you can kind of see it's all up there as well. If we zoom out far enough, you'll probably see it's all kind of located around this local high up this side, so using that as a swing high for the stop loss on many occasions. Anyway, moving on. As we kind of get an understanding as to kind of what's going on from a liquidity point of view, we can obviously experience potentially completion of this triangle and then that break upwards. We can go up a little bit higher than this target. 21,509 is the kind of minimum target range. This is what I normally like to mark up. And we do have a more kind of typical kind of range up here towards the 21,922. Don't be surprised if you hit 22,000 on the dot when it comes to Binance, and then see the reversal from there. So it'd be interesting to kind of see how that plays out. So on the smaller time frames, what am I expecting? Well, I'm expecting a small push up, bit of a pull down, and then a bit of a final push upwards to kind of take us there. You can see that the hourly stochastic RSI is starting to move out of the oversold. We're oversold on the 4 hour, but we are overbought on the 8 and the daily. Now, if I come into the stochastics on these smaller time frames, we can see that the 4 hourly is in the ground. That's okay. The 8 hourly has a long way to go. The 12 hourly is up in the overbought. The 16 hour is overbought. 20 hour is overbought. 1 day is overbought. None of these things have changed. So, we're only really bullish on the smallest possible time frames here, and not really on the macro kind of timeframes. Okay, so keep that in mind. Now, as we come up into the daily, the other thing that's really important to kind of just note here is that this could just be a quick wick on the daily chart. Could happen today, could happen another day or whatever, and to come up into that 21,500 level. But we are at the moment staying close below that 200 daily EMA. So it does look like the 200 EMA has become resistance here for Bitcoin. Okay, and again, that's no surprise, but typically speaking, the 200 EMA is a traditional trend filter. When you're below it, you're bearish, and when you're above it, you're bullish. And you can see that Bitcoin's been dancing around for a while. If we take a look over here, for example, you can see that we finally broke above it, we test it, we confirm it, we go into a bull run, and you get the bullish times, right? And again, same from down here. So we had the bear market lows, we kind of rallied on up, we kind of started to get into these impulsive structures, and we got confirmed above it. Obviously, the crash in COVID knocked us back down. Obviously, during this time, we were going into lower lows and lower highs. This was great because that meant that you're kind of looking for the reversal, and obviously higher highs and higher lows obviously go the opposite way. So you can kind of see these things playing out time and time again. So when we are right now kind of dancing around this area, it's interesting, right? Are we going to break above it? Are we going to confirm that the 200 EMA is going to be our support level or not? These are the things that we need to be kind of, you know, keeping an eye on. Now, essentially, we are in our lower highs and lower low channel overall, but we haven't really retested these proper lows. We've got one touch point down here from June. We haven't really come back down to the lower end of the parallel channel. Yeah, so it's one of those. But again, we have kind of got two touch points barely. It's not really even touching that top line, so we probably could even rally up and touch the top line as well, because we haven't got two touch points at the top or two touch points at the bottom yet on this one, so it could be a little bit too soon to be thinking about it. So yeah, keeping an eye on that. We're not looking for breakouts of there just yet. Essentially, you know, the DXY is kind of what's been driving this at the moment. You know, that hasn't really changed or any of those kind of thoughts. So on our daily chart, you know, we are where we are. Now, if I come up into our stochastic RSI, it's overbought, remove that, throw in our RSI, you can of course see how high we are on the relative strength index. And if I zoom all the way out, we haven't been this high since over here in January of 2021. Okay, and we kind of see what happened in January 2021. We had this move to the downside before we rallied up harder. Okay, so we are looking for corrections here in January of 2021 when we were up this high on the relative strength index. If I go ahead and grab hold of that, we had a move down of about 31%. Okay, so it's interesting. Obviously, it wasn't new lower lows or anything like that. We actually had a confirmation of a bull run much more to the upside. Now, if I if I just kind of throw this in here and we kind of look at that relative strength index and our current positioning on it up here, and we take a look at where we were even at 48K or even at the all-time high area, we are now higher on the relative strength index. This does indicate to us that we are looking for some downward momentum. Depending on where you want to take this from, it depends on that bearish divergence and different degrees to it. There is actually a bearish divergence indicator that you can use. We spoke about this yesterday. There's nothing overly odd or strange about these kind of concepts. These are pretty basic. Now, obviously, this could potentially be a cup and handle. We should acknowledge that. And that could also take us up towards our target that we've just been talking about. But it would actually be a little bit higher than the target that I had scoped out. That would actually put us more towards the $25,000. Now, if I do throw on the liquidity on this daily time frame, there it is. And then you can, of course, see that there's a reasonable amount of liquidity up there, but it's nothing in comparison to what is coming down here in the lower end of the charts. Specifically, as we kind of come up really towards 32,000, this is a major area of liquidity, but there's a bit of hit and miss in the areas that lead up to it. So there's definitely a little bit of liquidity, as I said, around that 21,500. You can kind of see it right in there. Other than that, we are talking about moving up into the 23,000s. Other than that, then you're talking 25s and then 27s and up to 30. So from a liquidity point of view, it's going to be interesting, and I do think that actually there's a lot more liquidity to the downside than there is to the upside, with a lot more long positions, as a lot of people are starting to feel bullish on the crypto market right now. And yeah, that's not my position. That's just kind of, you know, where a lot of other influencers sit. So let's go ahead and take a look. Let's see if my button will work. There we go. We've got some on-chain data. We're going to start here. We'll talk about this on Monday on Twitch as well. And we can see that there is now more Bitcoin leaving the exchanges over the last few days here. But you can kind of see, though, it isn't actually representing in our 30-day average bars yet. So we're actually close to the midline, and that's interesting. This year so far, 419,000 Bitcoin goes onto the exchanges, 429,000 comes off the exchanges, so we are net negative on exchanges with Bitcoin. This is a positive because it does mean there's a shrinkage of the supply, so that is good. That means accumulation has occurred, but we do want to be a little bit skeptical because when we go into the wallet counts, we're not seeing that flowing in the right areas, and I'll go through that in a second. The hodl waves, these are an indication as to how long Bitcoin has been static in a certain wallets for. Specifically, what we're looking for here is to see day on day whether or not anyone has been shaken out of the space. So we have two rows of data. The 13th of January is the top row, the 14th of January is the bottom row, and then we break this down into buckets of time: 10 years or more, 7 to 10 years, 5 to 7 years, 3 to 5 years, 2 to 3 years, 1 to 2 years. Then you have some months down here. I'm not too fussed about those, and then the last 24 hours. Now, these percentages are the percentage of the circulating supply. So 10 years or more, 13.54% of the circulating supply has not moved in over 10 years. Okay, no change day on day. It remains potentially lost Bitcoin or just real super long-term holders, right? I think there's actually fewer super long-term holders, and actually most of it is probably old Bitcoin dust that people forgot they even had. Like, if you had like 0.1 Bitcoin 10 years ago, it wasn't worth much. You didn't really think about it. You probably threw your hard drives away or whatever, and it's gone, right? It's gone. So 13.54 is a large chunk of the supply. Going down 6.16%, no change on the 7 to 10 years. We've got 7.85%, so a 0.01% increase on the 5 to 7 year holders, as the 3 to 5s go up a bracket, so they go down by 0.01. You can kind of see it here, 11.3. So that's all interesting. We have a slight increase here on the 2 to 3 year holders, 9.4 to 9.58, so a pretty significant jump there of basically 0.18% of the supply actually increasing from 1 to 2 year holders to 2 to 3 year holders. So you see a decrease then in the 1 to 2s, going from 18.12 to 18.12 to 17.94 if I can get my numbers out today. So all in all, Bitcoin's aging, like no long-term holders are being shaken out of the space. That's a positive. Now, as we come up to the inflows and the outflows, well, in the last 24 hours, we've seen more flowing onto the exchanges than has been coming off the exchanges. We've been talking about this for a while, but basically the red line is basically Bitcoin going onto exchanges. The green line is Bitcoin coming off the exchanges. I like to think of this as supply and demand, the red line being the supply, the green line being the demand. And in the last 24 hours, we actually see 51,000 Bitcoin go onto the exchanges and 47,000 Bitcoin come off the exchanges. These are still minor numbers and not overly impressive, but the main takeaway here is that basically our lines are just dancing around each other, which is basically meaning that the demand that is coming in here for Bitcoin is being met by equal amounts of the supply. So we're not really making big shocks to the system to see massive movements in price. Instead, you've got the DXY dropping. So as the dollar value drops, then Bitcoin goes up in value because you need more dollars to buy Bitcoin, essentially. And so understanding what actually is moving Bitcoin's price, and it's not supply and demand driven, is actually quite key. Now, as we come up into the retail wallets, this is where stuff really gets interesting. We can see that retailers have been selling in this pump right now. So we see all these influencers on crypto Twitter, for example, getting really bullish, saying, we're in a bull market, everyone should be buying. And yet actually the wallet counts are signaling that either Bitcoin's flowing into exchange-based wallets, or they're actually starting to sell off. And it's interesting, considering we have a lot more inflows to exchanges, then why would you move from cold storage to an exchange wallet unless your intention is to sell into this pump? And we actually finally start to see a bit of a decrease here with our retailers. This is the 𝗘𝗪, which is basically anything over 0.1 Bitcoin. We've got the shrimps, which is over 1 Bitcoin, and the dolphins over 10 Bitcoin. Now, I want to be really clear about these wallet counts. In the 𝗘𝗪 wallet, this small wallet over here at 0.1 Bitcoin or more, it includes all of the wallet counts for the shrimps, the dolphins, the whales, and the kraken, right? It includes the sharks. It includes all of them, in fact, right? Everything I have counted for. And that's why we can see these numbers at 4.2 million wallet counts. Okay, this does not mean that we see fluctuations in here and that's a justification for the smaller wallets increasing. That is not how this works. This is working simply because we actually are inclusive of all wallets in the lower tiered wallet counts, which means when these lower wallet counts are dropping down, it means there's actually people are selling off lower than 0.1 Bitcoin, for example. Okay, so we are seeing here that retailers are starting to actually sell off their Bitcoin. And these wallets actually just represent the last 90 days. You can see the significant surge to the upside here is all driven from FTX and the fear of exchanges. And now we're starting to see a bit of a curve to the downside. Now, when we take a look at the wallet counts for the larger whale investors, the only wallets here that are actually doing anything positive are the sharks and 100 Bitcoin or more. These ones have been increasing, whereas the whales with 1,000 Bitcoin have been coming down, and even the Kraken here has been coming down over the last couple of days. You can kind of see that they're now rocking only 114 wallets from previously up there at 123 wallets. Basically, essentially what I'm saying here is that retail investors were providing exit liquidity for these larger wallets and have been doing so for quite some time. Now, the shark wallets, they've been kind of accumulating here, and I don't really fully understand why, but they've made mistakes in the past, and historically we've covered that, where they deviate away from price action. I always say that the sharks are more like traders, kind of trading BTC, but this doesn't make a lot of sense to me as to why they are completely deviating away from everybody else. Now, in 2018, what did we see? Well, we saw that the retail investors with 1 Bitcoin or more buying the dips. They bought every dip because they believed it was the bottom of the bear market all the way through until they got to this flat period here, kind of starting around September of 2018. Basically, the price traded sideways, but they were selling because they didn't believe that Bitcoin was going to go anywhere. So they start to sell off their holdings, okay? And you can kind of see that significantly here as they buy up all these dips and they start selling into the actual lows of the bear market. Why is this important? This is important because this is particularly interesting to the whales, because there's always a buyer and there's always a seller, right? If the retailers are selling their Bitcoin, someone's got to buy it from them, right? There's always a buyer, there's always a seller. There isn't some magical kind of pot of money out there where you can just sell your Bitcoin and get, the liquidity for it. Someone has to buy your Bitcoin, right? And there's basically always a winner and always a loser. So when we see the retail investors selling out in 2018, the whales here, the 1,000 Bitcoin or more, were buying during this phase, and you can kind of see it right in there. Again, they start to heavily accumulate. The Kraken size wallet, I think, is basically in partnership with the whales. They accumulate during the bear market and then flood the entire system, bringing in the actual lows of the bear market. Okay, so excess amount of Bitcoin, supply and demand is key. Okay, if you have too much supply, the price goes down because there's just too many Bitcoins out there for people to buy. So people who are selling, they sell cheaper because they want to sell theirs first. Okay, so the more supply that comes into the system, essentially the lower the price will end up going. So essentially, if we kind of reflect on where we are, we've seen retail investors accumulating. They're starting to finally maybe have a bit of a turn here. It's going to be interesting to see if this is sustainable or not. And they're selling into a pump for once, which is good to see. We have the whales that have done nothing but come out of the positions, minus the fact that end of February they accumulated during this kind of low point of around $32,000 up to around the $48,000, and then obviously they're just selling and selling and selling and selling. Okay, so really interesting. Obviously, with the Kraken so far, they've accumulated during the bear market. Are we finally getting to the point where they're going to flood the system with excess Bitcoin and drag that price down? It's going to be interesting to kind of see what it all folds out as. But it does look like there's some progression finally happening here, specifically with the retail investors starting to come out. This is what the key indicator is for me. I want to be seeing whales and large institutional investors buying, and I want to see them buying it from the retail investor. It doesn't make sense that the whales are selling into a bull market, right? If your bear market bottom has just come in and whales are selling, it doesn't make a lot of logical sense. These are people who historically, and rightfully so, are in positions of where they are because they have transacted in this space impeccably well. They are dictating the way that the market moves. And until big money decides to come in here, I don't think that a bottom of this bear market is potentially in. So to think of this as a bull market right now is a little bit, it's hit and miss. I don't think that's really the case. Now, we can, of course, see things change. We could potentially see a bit of a pullback down and not go into new lower lows, but set a trend, and then we actually start seeing accumulation occur on that next pull to the downside. That's something that I could see happening and something that we want to be aware of. I'm not saying necessarily that we have to go into new lower lows, but I am saying that we need to see confirmation of a trend before we can get too giddy about thinking that the bull market has started. So when it comes to all the data on chain and everything else that's fantastic that's going on in terms of the wallet counts and the inflows, the outflows, and all those really cool things that we kind of make sure that we stay on top of, it's important that we also reflect on what is going on our weekly time frame. We can't just, blindly, follow what influencers are saying. We have to kind of, draw up some kind of conclusions ourselves. And here we can see the 50 EMA approaching the 200 EMA. This would be, of course, considered a death cross on our weekly time frame. And so we want to be aware of that. Now, whilst this is happening, the other thing that is I'm blissfully aware of is our stochastic RSI is approaching that point of overbought as well. Okay, we've got some progression here still to go. Still potential for that move upwards, that's fine, but we are heading up into that overbought area. Now again, we end up with divergence here, okay, and we can kind of see it on this kind of macro scale. You can see we hit these high points here on our trend line. You can see that we might be able to push up a little bit more, hit our trend line here as well, which also coincides with the rejection. If I go ahead and grab my pencil here on the 200 EMA, okay, all of this stuff is coming together right here. Trend line, 200 EMA, 50 EMA, death cross, all of that there is incredibly bearish, right? So we want to be really aware of that. Now, if I draw a trend line on the stochastic RSI, you can kind of see it also very similar kind of structures. We're high up here on HIS. Prices down low, again, coming in, prices down low, even at this point. This is bearish divergence, right? If our stochastic RSI goes up high, whilst the price is going into lower highs, then essentially that's going to be bearish, right? We don't want to be kind of, tricking ourselves into thinking that that's going to be a positive thing. Essentially, I'm really concerned over this weekly chart. I think this weekly chart gives us a very clear picture of what the macro direction of Bitcoin is going to be. And, it's not the first time we've seen movements like this to the upside. And we have a load of people on the social medias getting really happy thinking that the bull market has started. I mean, over here, for example, we saw a 42% move. And then, we come back down. Now, during that time of June, all the way through to those peaks in August, I was saying, it doesn't make sense that we had an overlapping structure. Now we can kind of sit back and say, yeah, we did come down into lower lows, right? But no one, and obviously, the critics saying that, we don't know what's going to happen with FTX. Well, back in August, we didn't know, but we didn't like FTX, we didn't like Sam for years, and you can check that and verify that on the channel. But we picked up on the liquidations that were happening with FTX way ahead of time, and were being able to communicate to the cheeky community that actually you might want to reconsider holding your positions on FTX because, when your 80% of all the liquidations were on one platform, it didn't make sense. 800 million at one point was being liquidated on FTX, and that was basically just a money grab in my eyes. So, that's another reason to watch us on Twitch. If you're not familiar with all that kind of stuff that goes on, then definitely check out the Twitch channel linked in the description below. So this weekly chart, guys, kind of just to summarize, it's incredibly bearish. There isn't a lot of positivity to be had here, right? We're not above the 200 EMA. We got rejected from the 200 EMA. We have, of course, pushed back above the previous supply. So supply was here. It's now looking like it could turn into demand. So that's a positive. But essentially here, it does look like we're going to be retesting the 200 EMA or the trend line with a death cross looming on the 50 and 200 EMA. This is bearish. Almost overbought on the weekly stochastic RSI, marrying that up with, of course, our daily stochastic RSI that is getting rejected. Also from the daily 200 EMA. It doesn't look positive when it comes to a Bitcoin here. So I'm gonna leave this video right there, guys. Like, let me know your thoughts and opinions in the comments down below. I'm taking a lot of heat at the moment because I'm remaining true to my analysis, and I'm happy to admit if I'm wrong, I'm wrong. I'll admit it. I'm not that proud, right? But the data to me just says, don't get too confident thinking the price is going up. Essentially, it tells me that I should be more bearish right now than bullish. Greed is the enemy. You should be basically fearful when others are greedy, and fearful and greedy when others are fearful. That kind of stuff, right? Let me know your thoughts in the comments down below. Light up that like button if you find this useful and informative. Want to see if we can hit 2,000 likes on this video. Make sure you do that. Do appreciate that. If you're new, subscribe. Goes a long way, guys. It really does. Join us in Discord if you're looking for more kind of day-on-day banter. It's fantastic down there. Until the next one, have a fantastic day.